you get fractional shares that way, the little kids can get involved also.
Oh, that's beautiful. They love that.
Well, yeah, I figure between me, the ex-wife, my son and my daughter-in-law, and then my in-laws, between the six of us, what do we come up with? 10, maybe 15, $12 a week with all the spare change we collect.
Yeah.
And then when he's 18, which is 13 years from now, if we continue doing that often, he should have a nice chunk of change when he graduates high school.
No, it's fantastic. Actually, I'm teaching my daughter. She's taught a 9-year-old. Well,
Yeah.
my daughter's like a mini genius, but she's 40 years old and doesn't know anything about finances.
Oh.
I told her about you, and she's like, "Oh my God, I wish I knew this earlier." I said, "You're 40 years old. It's perfect timing for you."
It is, because at 40 years old, she's got 20 years to go if she wants to retire at 60.
Exactly.
Okay, who the hell wants to retire at 65 or 70? That's crazy.
Hey, don't talk to me about that. I'm 72.
Wow, are you retired yet?
I am on my 3rd career. I retired with a pension and everything from my other career.
Wait a second. Wait. Wait, hold on. I'm.
You gotta go do your thing.
Yeah, no. I got a question for you. What's a pension?
I know. Well, it's actually defined benefit pension.
No. I know what it is. I'm being facetious only because, like, nowadays, there's no such thing as pensions anymore.
I told you I have a defined benefit that was out in the 90s. They kind of like, nobody wanted to do those. But I had my own company, and I put that in here, and it really is great. It was great. So, but you know what? Another thing, I'm a realtor, by the way.
A realtor? Ooh, I have some really awesome weasel clauses. You know what a weasel clause is, don't you?
Weasel clause. That's an interesting one. I'm going to write it down.
You've never heard of a weasel clause?
How to weasel out of a deal?
Exactly. You have to word it in the back towards the back of the addendum. Here's a good one for you. You ready?
Yes.
This is how you can use a deposit or an earnest money as a prepaid management expense towards the seller. So rather than putting money up front, earnest money deposit, you write in it, say X amount of dollars to be considered as prepaid management consulting fee for the next 12 months. That way you can use it as a tax write-off, because in actuality it kind of is. Because you got any questions about the house, who better to call than the previous seller?
That's very true. I like that idea. That's a good idea.
And then you got the how to get out of the prepayment penalty. Now, prepayment penalty. Well, prepayment penalty is they penalize you on a percentage of the last payment. So let's say you have a $100,000 loan. You can pay $99,000 and not get a prepayment penalty because you still have an outstanding debt of $1,000. So once you go in and pay that $1,000, well, you're only getting penalized on the $1,000.
That's a pretty good idea. I like that.
I used to do real estate years ago.
Yeah, it's pretty good. I like it. So now I'm learning all about buying options and buying it and all of that. So I will tell you that I really enjoy the way you approach the whole thing. You have fun with it,
Well, think about it. We only go around once. You don't get a reset button. Unlike what the newer generation thinks, hey, just hit the reset button, we'll start over again. Doesn't work that way.
No, not at all. So yeah, I like it. I like what you're doing and everything. And I actually picked out my 5 stocks for tomorrow.
Yeah, which ones?
I'm limiting it to 20 grand each.
Okay, hold on. Give me the 5 stocks. We'll take a look at those 5 first thing. What do you got?
Okay, hold on a second. You gotta making me go to my book.
Oh, come on. You should have this at the top of your head. You should be excited. Your very first 5, you should have that memorized.
Except for the fact that I'm working on $3 million real estate deals on top of it. So hold on a second. You ready?
Sure.
So I'm doing a hell of a job. Okay, oh God, you know what? Don't get old. Need my glasses. There we go. Marvel, HUM,
STZ. Wait. MRVLS. What was this?
HUM.
Humana.
STZ.
STZ. Kohl's.
But I love that stupid stock.
I've had that thing for a year. Every single week it gives me a nice premium. Okay, what's number 5?
And I have to tell you, Riley got some good write-ups today.
Did it?
Yeah, it did, and it went down. So I'm going to try to get that one really, I'll try to get it at a good price. But right now it's like almost 3%.
Well, that's not bad.
That's a percent a day.
Yeah, but think of it this way. Riley is one of the few stocks you cannot buy on margin. Has to be all cash.
I don't do margin at this point until I'm more comfortable.
Hey, I don't blame you. Don't ever do margin until you're comfortable with what you're doing. All right, I'm gonna mute you to get started.
Thank you.
All right, Eric, have a good day.
Yes, sir. Have a great day.
Will do.
Bye-bye.
All righty. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the journey for a simple, safe, predictable, consistent 1% per week. Now, let me briefly explain to you how this came about. Now, I'm sure as a trader, we all went down that path one time. We day traded, we did this, we did that. Well, you know what? I was trading for about 5-6 years. I was doing rather well, okay? But in 2008, my 9-year-old daughter jumped on my lap and said, "Daddy, what are you doing? Can you teach me?" She didn't really say it that tone of voice. You know how little 9-year-old girls are, "Daddy, what are you doing? Oh, can you teach me?" So here's the thing. Most adults don't know how to invest in the stock market. So how am I supposed to teach a 9-year-old how to invest in the stock market? Okay, so I had to come up with a couple simple rules once I overcame the objectives. Well, the objectives are, it had to be simple. For a 9-year-old, come on, how do you explain to a 9-year-old? All right, I'm going to get there, all right? Just like a good movie, everything's going to come into full understanding as we progress. Had to be simple. It had to be safe. The profits have to be predictable and consistent. And here's the kicker. You ready? No way for her to lose. Because we all know if a 9-year-old little girl starts losing money, guess the first thing she's going to do? She's going to start crying. And guess what's going to happen with Daddy's going to feel like crap. Because no dad ever wants to hear his 9-year-old little girl start crying. Okay, so simple, safe, predictable, consistent, no way for her to lose. All right, so that 5 criteria. Well, how do you meet that? Well, here you go. You ready? 5 rules. Rule number 1, never buy something that's not on the list. What list, you may ask? Well, for my daughter, it was specifically companies that were consistently profitable for at least 2 decades. Now, we're talking about the Dividend Kings, okay? 50 years, 5 decades, 50 years of increased profits. The Dividend Aristocrats, okay? 25 years of increased profits. The Dividend Champions, 25 years of increased profits. The Dividend Contenders, Dividend Contenders was 10 to 24 years of consistent profits. And then for the fun of it, we just threw in Warren Buffett's list. Because if it's good enough for Warren, good enough for me. Now, we put all those stocks into a calendar. Let me show you. I need the glasses for this one. Into the calendar you go. Right here and, nope, right there and right there. All righty. So, into the calendar. Oh, this is July. Okay. So, every single one of these little green dots represents a company that has continuously increased its profits for more than 25 years. So, for my daughter specifically, we put them into the calendar. Okay. Now, the calendar will tell you exactly when they pay their dividends. And I'm going to explain to you in a second why that's important. But talking about dividend stocks, there's 4 dates you need to remember when it comes to a dividend stock. Okay, ready for the 4? Here we go. Date number 1, the announcement date. The announcement date is nothing more than when the company is saying, "Hey, everybody, this is James from Dividend Stock Talk. We had a great year this year. We made so much money. This is how you're going to get your share this way." Well, they just tell you how much money they made and how you're going to get your share. Because as a shareholder, as an owner of the stock, you are entitled to a portion of their profits. Okay? First date. The date of the announcement. That's when they tell you what they made and what's what. What's what? They're going to tell you what's what. All right. Date number 2. This is the important date. Okay, out of all 4 dates, this is the important one. Date number 2. Date number 2 is called the EX dividend date. That is the last day the stock trades before they pay the dividend. That is represented by these little green dots. Okay? General Dynamics, Lowe's, Abbott Labs, AbbVie, Roper, McKesson, Essen, Illinois Toolworks, Cardinal Health, Caterpillar, Hormel. You probably heard of all those. Okay, that's just some of them. Okay, now, date number 3. The date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, the payment date. Well, that's when you get your money. Simple, 4 dates. Now, let me tell you why the EX date is the important date. Well, the EX date, the last day the stock trades before the dividend is paid. Now, here's the thing about dividend stocks, especially dividend stocks on my list, because they've been proven to have a track record or a historical performance of consistency, predictability. Okay, now they increase their dividends every single year, year after year, even during some of the crap we've seen in the last 10, 20, 30 years. They consistently increase their dividends, which means if the dividend is a portion of the company's profits and that dividend increases every single year, well, it's impossible for the dividend to increase without the profits increasing. Because the profits dictate how much the dividend is going to be. So if the dividend increases, the profits increase. If the profits increase, the dividends increase. They go hand in hand. Okay? So a portion of the profits goes to the dividends to the shareholders. That's us. So if the company consistently increases its dividend every single year, well, that tells me it's consistently profitable. Well, now I don't have to read 20 years of annual reports or quarterly reports. I'm a lazy trader, I admit it. I want simple, safe, predictable, and easy. And I've been spoiled because this trading strategy has been working for me very well for the past 15 years. Okay, now I'm sharing it with you for free. I'm not going to ask you to buy anything. I'm not going to ask you to subscribe to anything. We all know how it works. You know, I've been here for a while. I've written a bunch of books. I have a home study course. I got all this stuff for sale, but I'm not trying to sell anything here. You know how it works. Go to the website, do it from there. So here it was just education and just showing you. I'm actually going to show you everything you need to know. So you don't need to buy anything. But you can if you want to. Anyway, let's keep on going. So the importance of the EX dividend calendar. Let me explain briefly. If the EX, here's Lowe's right here, the 23rd. Let's highlight it right there. The 23rd of July, Lowe's is going to pay a dividend. Well, the funny thing is, Lowe's pays a dividend every 90 days. So this, tomorrow, is the first day of the 3rd quarter. Okay, so count it. 1, 2, 3, 4. Lowe's pays a dividend the 4th week of every quarter. The 1st quarter, the 2nd quarter, the 3rd quarter, the 4th quarter. You can set your clock by it. You can set your clock by it. That's why my very first book was how to get 10 to 20 checks per month like clockwork. Because every 90 days, Lowe's on the 4th week of the quarter, 1st quarter, 2nd quarter, they pay the dividend. Okay? The 1st week of the quarter, General Dynamics, Cardinal Health. Okay, consistently every 90 days, and it's rotating. Okay, I have a list, and week 1, these stocks, week 2, these stocks, week 3, these stocks, week 4, these stocks, and then I just rotate it. Now, why? Let me explain. So if Lowe's has a dividend on the fourth quarter, okay, the 2 weeks prior to this dividend, that's where I want to jump in, because the stocks have a tendency to increase in value just before they pay the dividend. But on the flip side, after they pay the dividend, the stocks go down a little bit. Sometimes. Not always, but sometimes they go down after. So, that being said, knowing that in 3 weeks they're going to pay a dividend and the stock's going to increase in value in 3 weeks, just knowing that stock's going to move up in value, well, what do you do with that information? Think about it. If you knew in advance a stock was going to move based on historical performance, because years ago, I actually had a software that actually went into the data stream to show you could probably do with AI nowadays, to show the consistency in which the stock actually moved before the EX date, consistently. So what would you do? Would you buy the stock? Would you buy an option? Would you sell an option? Would you do four-corner spread? Would you do a bull call spread, a bull put spread, a calendar spread, an iron condor? What would you do if you knew? Okay, so back to my daughter. So knowing this little tidbit of information, I needed something that was simple. Well, the simplest thing, the simplest trading strategy is just buying the stock. But there's no profitability in just buying the stock unless or until the stock moved up. But there is one trading strategy that you know what your profit is before you do anything. And the stock doesn't have to move at all, and I'm still making the profit. That's the trading strategy I'm about to show you here. So like I said before, rule number 1, never buy something that wasn't on the list. So find a good list. Create one yourself. Find stocks that you like, that you would buy and you would own and never sell, and create a cash flow machine. Okay, we're going to get into that a little bit further on. So everything, like I said, like a good movie, everything comes together in the end. So just sit tight. Hopefully all your questions will be answered. And if you have a question I'm not answering, just ask. I will try to get to every single question. Now, months and months ago, like last year, I would answer every single question. But nowadays, there are so many questions coming in, I can't get to all of them. And I got to apologize. But I do try to answer every single one before the night is over. Okay, so rule 1, never buy something that's not on the list. Rule 2, never sell at a loss. It defeats the purpose. Okay, we're here to make money. We're not here to buy a stock. Well, if it goes down, then sell it. No. Okay, also with rule 1, don't buy it unless you don't understand it. Now, what do I mean by that? You should understand everything about that stock before you put your hard-earned money into it. Okay, what's the 52-week high? What's the 52-week low? What's the rate of return on the cash in the company? What is the cash flow look like? Okay, what do the dividends look like? How many years have they consistently increased their dividends? What's the book value? Now, these are simple questions, or they call it fundamental questions, because there's a difference between fundamental and, what's that other one? Uh-oh. It'll come to me. But anyway, never buy it unless you understand it. That's rule number 1. Rule number 2, never sell at a loss. Rule number 3, this one always amazes me. Now, the reason why it amazes me, because it sounds so simple, you think to yourself, why the hell wouldn't everybody do that? You'll be amazed, because you will see tonight people asking me about stocks that don't fit. You ready? Here we go. Rule number 3. Make sure the company is consistently profitable. Now, for me, I want 2 decades. That's 20 years. Okay? Now, you can do whatever you want, but what I want is 2 decades. Okay? Now, tonight, throughout the night, you'll have a lot of people asking me to take a look at stocks. I'll take a look at them. I'll give you my opinion. But that's just my opinion. If you find something that you like and it makes sense to you, well, then you do you. Okay? I do what I'm doing, and I'm just sharing it. Okay? I don't expect any of you to listen to me. Okay? I'm creating a documentary series for my children or my grandchildren. So When I am gone onto the next adventure, okay, I'll have the video series for my children or my grandchildren, maybe my great grandchildren. So, how did Papa G make all his money? Well, here you go. Here it is. Okay, one video after another. Also, this is a good one. Some people will think I'm a dick on this one. You ready? My children and my grandchildren will not be able to inherit any of the money that I'm leaving behind unless they understand this concept. And yes, I'm going to create a bunch of tasks and a bunch of study courses that they have to pass before they are eligible to get any of the inheritance. I know it's a dick move, isn't it? It's like when your parents, like when your grandparents die and they leave you a bunch of money, but they leave a catch. You can't have it until you do this, this, and this. Now, don't get me wrong. I am building it for my children, my grandchildren, but I'm not just going to give it to them. I want them to understand how money works, okay, and how to have one less thing to worry about. And that's all this is. I mean, yeah, you can make a lot of money, but money is just one minor fraction of your life. All I'm offering you is just one less thing to worry about. So if you can get 1% every week, that's what I'm looking for. That's 50% a year. If you can arrange your finances where 50% a year is perfectly acceptable and you can live comfortably, well, that's great. But it's also just one less thing to worry about. There's other things in life other than money. All right. So I was just saying, rule 3: make sure the company's profitable. You'll be amazed. Some of the stocks you'll hear me say, "What the hell were you thinking, putting your money into this?" But everyone's different. All right. Rule number 4: weekly options only. When I say I want weekly cash flow, the only way to get weekly cash flow is by something that trades on a weekly basis. So you got two choices: weekly options or sit in front of the computer and stare at this all day long. Yeah, I have no desire whatsoever to sit in front of my computer and look at charts all day. I could make a shit ton of money by sitting here staring at this looking for, yeah. Okay, no desire. I'm at that point when I'm retired. When you're retired, everything changes. Literally. I remember the day specifically. I had planned, me and my girlfriend at the time were about to buy a motorhome to travel across the country. And then I get the phone call. Dad, you sitting down? You like that one? Dad, are you sitting down? You're going to be a grandfather. 90 degrees. My life path is going this way. Phone call, boom, totally changed. That's exactly what happens. And then when you retire, your life changes again. Your focus changes. So my focus now is to record all the information I've accumulated over my lifetime into a video format for my children, grandchildren, and great-grandchildren. So they don't have to relearn everything I took a lifetime to learn. So hopefully their life will be better. Hopefully. There's no guarantees. You can lead a horse to water, but you can't make it drink. See? You can give the children a whole bunch of money, but the catch, you can't have any of it until you have proven that you know how to manage it and you know how to make it grow without losing. Because I have two main goals in my investing. Number one, consistency of profitability. Means I want to get profits every single week. And number two, preservation of my capital. So if my account is growing slowly every single week and it's paying for my living expenses, great. I'll never run out. I want my children and grandchildren to understand that same thing. I'm going to give them everything they need, but I'm not giving them access to the money until they can prove it. That's what this is all about. I'm not trying to sell anyone anything. I'm just creating a video log for my children and grandchildren. You just get to be here to enjoy, to reap the benefits. Okay? So, rule 5. Make sure the numbers work. We're actually going to do a bunch of trades for you to see exactly how it works. And then all you have to do is just put the stock that you like into the, let's say, the square peg into the round hole, and then see how it works. Okay, so now if you didn't know, if you're new here, what you're seeing here on this screen here, okay, is being recorded live on YouTube. So you can, if you want to, Okay, go sit in your comfy couch, kick back, relax, grab some popcorn, some soda, and watch on your big screen TV. Because you can see everything that I'm doing on the big screen TV, and it's going to be recorded. So if you need to eventually go back and watch an episode to see what the hell is he talking about, yeah, okay, that will be available after tonight. Okay, it's being recorded. It's not recorded yet. Today is what? What is today? 6:30, which is June 30th, 2025. Okay, so you can go to YouTube, that10minutetrader.com, and you'll see I have over 1,100. That's 1,100 videos. I've been doing this for a while, okay? I think I shared my very first blog post in 2011. Okay, my very first video I think was in 2012, 2013, somewhere in that area. Okay, yeah, but I've been here for a while. So let's take the questions as they come. Let's go through the stocks as we get them, and hopefully I'll be able to answer all your questions. Okay, so we got some questions over here. Dude, I got braces and it hurts so bad. I have no idea why some people give me these questions. Okay, Suitcase, how are you doing today? Hakuna, sir, I thought your grandchild was fully trained now, and we're going to run today's show. No, he's 5. Okay, he gets tired after about 15 minutes. Like he was on last night for what, 15, 20 minutes, and then he just like disappeared. Okay, he's 5. You can't force him into it. You know, he'll grow into it eventually. How many disciples do you have in the pipeline? Ooh, a couple hundred. All right, so let's keep on going. What do we have here? All righty. Okay. All these people saying hi, hey, hi, hello, all this stuff. All right. Young Money, David. Oh, Zed. Oh, Mr. Alphi. Sweet Den, Barry, John, Roger, DG, Miss Apfi. Okay. Bum, 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 bum. 3 months, 6 days. Broken English. Not quite sure about that one. Wicked Genetics. Okay. Uh-oh. Whoa, where am I? Ooh, wow. I missed all these questions. Oh, you're early tonight. Yeah, we're moving to a little bit earlier so I can end a little bit earlier. Good evening. FL Hockey, how are you doing today? Brandy, Bob, what's going on? Lonzo, what's happening? Michael, Lonzo, bump, bump, bump. Broken English, good night. Yep. All right. Grande. Smells like bad decision and Dr. Pepper in here. I've never heard that one before. All righty. With $9 to $10, then 18 to 20%, then 10, then 5, then 1. 1 year. Broken English. I'm not 100% sure. Or 6 months for your kids. Young. Okay. I'm not quite sure what we're going at. Then 10,000 hours for 12 months. Okay. And then the kids get to the age, dime, studies. Yep. Okay. Wow. All right. 3 months, 6 days, 100 days. Okay. Broken English. I'm not. You're all over the place. I have no idea what we're talking about. 90 days. Yep. Technical analysis. That was it. You got fundamental analysis and then technical analysis. Okay. So it's a little bit of both. Okay. We'll see that in a little. Eagle, how are you? Brian, good evening. Drip. N.E. Casey, what's up, boss? Thank you for all your wisdom. I managed to make 1.5 in Gap, 1.2 in Siri last week. Cool beans. Remy, how are you doing? Love the sidekick. Yep, he's fun. He does keep me on my toes. Covered calls only. Okay, so user 1609227616. Why couldn't your parents just name you Peter or Tom or Ted? Okay, covered calls only. Yeah, here for free, one trading strategy. That's it. It's simple, it's safe, it's predictable, it's consistent. Okay? Have watched before, kind of understand it. Don't understand when you make your money. BBAI have weekly options. Lonzo, for some strange reason, BBAI have a sneaky suspicion that does not have any weekly options. What do you do when stock tanks? Hayes, when the stock tanks, you collect higher and higher dividends every year. I think this was your longest intro, 1,100 videos. That's impressive. Thank you. Hey, Oksana, Kagdala, Spasiba. Okay, anyway, let's go to the trade. Let's go here. Let's put in the chart. Some strange reason, Lonzo thinks BBAI. BBAI. Okay. Now, Lonzo, I'm having a little bit of a challenge trying to believe that a company that was $1 a couple of months ago has 2 decades, 20 years of increased dividends to the shareholders. What do you think? Okay, it was $1 a couple of months ago, shoots up to 10, drops back down to 250. Now it's at 675. Okay, I'm not 100% sure that thing is even worth looking at. What do you do when stock tanks? Hayes, here's the thing. Okay, take a look at this one right here. Here's the high, 10 bucks. Here's the low, $1. If you're not ready to buy a stock at 10 bucks and have it drop to 1 and not panic, you probably shouldn't be playing this game. Because stocks go up, they go down, they go up, they go down, they go up, they go down. See? Okay, up, down, 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 up, down. That's all they do. They go up, they go down. If you like a stock, if you like a company, plan it out. It's not that difficult. When a stock goes up, okay, whatever it is that's going to cause it to come back down again, I call it profit taking. Because if you had it at $1 back in October and it shot up to 10 in February, well, that is a nice profit. If you do not take that profit, that's your own fault. Because what happened? It got up to 10, then it got profit taken, it came all the way back down to 2.25. Okay? So when it comes down to 2.25, turns around, starts going back up again, that's when you jump in again. When she goes back up from 2 to 4, maybe then get out. Drops back down, jump back in, however you want to do it. You want to hold it long term? Fine. Buy it, hold on to it for 10, 15 years. If that's your approach, you're in the wrong place. I don't buy anything and hold it forever. I don't do that. I go in with that intention. Because if the stock drops, I will hold it until it hits my target. Perfect example is Kohl's. I jumped into Kohl's at 22. Well, now it's down around 8 or 9. I have no intention of selling it because every single week it gives me a nice profit. So why get rid of it? That's my idea. Okay. What do you do with stock tanks? Good call on Kroger. Thank you, Lonzo. What time frame you looking the chart? Okay, that's 1 year. Okay, way over there is a year ago. Right over here is today. This is 12 months worth of stock information. Is that going all the way out there? Yeah, that's the end. Do you obtain insider information? No, that's cheating. Okay, my name's not Pelosi. Yeah, I have great contempt for that woman. Everything's all illegal stuff is good for her and good for her cronies, but not for us. But they do have some software that allows you to follow exactly what those that have insider information do. Okay, so Fonzarelli, dude, you've been here long enough. Fonzarelli, you have. Yeah, I'm calling you out, dude. Misty, go take a look at what consistency Misty has increased their dividends. Come back and tell me how many years Misty has increased their dividends to the shareholders, and then we'll take a look at it. All right, questions over here on TikTok. What do we have? Nothing. Everybody's just saying hi, hello, hi, hello, hi, hello, hi, hello, hi, hello. Okay, uh-oh. None 1651 wants to take a look at Pepsi. Okay, Pepsi. Now, we've been watching Pepsi for the past couple of months, waiting to find the bottom. Well, it looks like we may have found it right here. So we're going to zoom in and take a close look at it. Club Med Tom, sit tight. We'll take a look at that one in a little bit. Ben said, how you doing, Ben? All right, so let's take a look at Pepsi. Now, anytime I look at a chart, the very first chart I want to look at is the 1 year chart. Okay, I'm looking for 5 things. Okay, you're going to see a lot of 5s. It makes it easy. 5. Ready? Number 1, the high of the year. Number 2, the low of the year. Number 3, where was it a year ago? Where is it now? And number 4, probably the most important one, follow the bouncing ball. Okay, down, up, down, up, down, sideways. What's going on right here? This is recent. Now, before I look a little deeper into the chart, I want to take a look at the number. Okay, what's the current price? Then I want to go over to the options because I do weekly options. All right, I buy good quality dividend stocks and I sell options against them. So currently we're at 132. The 132 is going from 117 to 132. Well, here's the kicker. Okay, there's no trading on Friday, so we got 3 days left. It's very challenging to get 1% with only 3 days. Now we usually have 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. But Monday's already gone and there's no trading on Friday. So getting 1% in 3 days, probably not. So let's take a look at next week numbers, okay? So this week, 3rd of July, let's change this up so we can see all of these. 6, and then we want to look at 11 July. Okay, so more than likely, we're not going to get a full 1% for this week. Now, yesterday, or last night, when we were on last night, well, we could have because we had 4 days. 3 days, very challenging. But let's take a look at next week's numbers. The 132 is going for 206. Well, that's over 1%. Well, great. Well, let's take a look at this chart now. Let's see what is the chart telling me. So who can name me the album? Rod Stewart back in the 1970s. Every picture tells a story. Because every picture tells a story. High, low, was, is, look at the motion. That's a picture. That's a story it's telling me. Well, that's the whole 1 year chart. Now, I don't invest based on what happened 6, 7, 8 months ago. Because I'm only in this thing for a week. Okay, I want to get in on a Monday and I want to get out on Friday. Every once in a while, I'll push it to next week and I'll roll it over. Now, we'll talk about rolling over in a little bit, but at this moment in time, I just want to buy the stock, get my 1%, get the hell out, and pick something else next week. Because the bottom is here, best time to buy, but once she goes up, how far is it going to go before it turns around and comes back down again? Okay, usually, okay, and there's a lot of people out there, so hold on a second. 11 million shares on Pepsi traded today. So my measly $5, $10, $15, $20,000 isn't going to mean anything because I'm just another small fish in the pond. But what I'm looking for, I'm only looking for 1% a week. So think about it. At 132, what is 1% of 132? It's like $1.32. So once this stock goes up to 133, 134, I want to jump out. That's my 1%. That's for me. You got to figure out what your entry, what your exit point is going to be. Now, there are some people that will wait 5, 10, 15% before they jump out. Well, I want to do a covered call. I really don't care if the stock moves at all. And as we progress, you'll see exactly what I mean. So let's try it. Okay, we're going to jump into this one here. A year ago, Pepsi's at 164. Now, the high of the year, which was back in August, okay, that was 181. Now, from there, she drops, retraces, drops again. Look at this area right here. Basically just going sideways. Now, people call it sideways. I call it channeling. It's staying between 127 and 132. Just that one little area, just sideways. Okay, not a big move. But look at here. Bottom's here. 1 day up, 2 days up. There's 2 days to the upside. Well, if tomorrow she's higher, that would be 3 days to the upside. If she's higher than 132 tomorrow, I'll jump in because I want 2 days to the upside. And then on the third day, if everything looks good, I'll jump in. But that's me. You have to figure out what is right for you. I'm not telling anyone what to buy. I'm just showing you what I'm looking at, Okay, you have to figure out what's right for you. Never blindly listen to some idiot on YouTube or TikTok. Yep, that would be me, the idiot. Call me whatever you like, but I have been doing this for a while, and I do have proof to show what I have made over the years. But I'm not telling anyone to do anything. I'm just showing you what I'm doing, and I'm showing you how the numbers work for me. So if you want to do something similar, or if you want to copy what I'm doing, fine. I'm not giving advice and I'm not giving stock tips. I'm just reading what you guys asked me to look at. So here's Pepsi. I think this might be the bottom because at the bottom here, 1 day to the upside, 2 days to the upside. Me personally, I would jump in on 3, which might be tomorrow. So let's take a look at it. The 132, so let's get rid of this. And we're going to do what is called a covered call. Now, I like covered calls because they're simple. They're safe. They're so safe. In fact, you can actually do a covered call in your retirement account. There's a lot of trading strategies you cannot do in your retirement account. Well, a covered call is one that you can. Now here, this little drop-down window, it tells you all the different trading strategies there are with stock options. Single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, synthetic, collar, butterfly condor, iron condor, vertical, blah, 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 blah. Okay, I teach one for free, only one. Okay, it's the same one I created for my 9-year-old daughter, and that is the covered call. So first thing I'm going to do is I'm going to change it to covered call, and then Think or Swim, which is a software I'm using, free to use from Charles Schwab. Okay, now I've been using Think or Swim for over 20 years. I wrote a book about 15 years ago on choosing the right trading platform. All right, so I don't like this week's because the numbers don't look good, so I don't want to see that. And then I want to do the 132s right here. Here's the 132s right there. It automatically fills everything for me. The only thing I've got to do is decide how many shares I want to buy. Well, we're just going to do one contract. Now, one contract is of 100 shares. Now, here's another way of looking at it. Rather than thinking of, I'm going to turn the fan on. There we go. Uh-oh, nope. That's a little too cold. Another way of looking at it is I am creating what is called a cash flow asset, weekly cash flow asset. So I'm going to take a bunch of money, stick it into Pepsi. Well, now I have an asset. Pepsi. It's my Pepsi machine. Okay, you may have a Pepsi machine. You got to put $1 in, you get a Pepsi out of. Well, I'm going to put $50,000 to $100,000 in there, and it's going to give me a weekly cash flow every single week until it hits my target. And then I might decide to sell it, or I might decide to roll it into the next week. Okay, so Monday is the day I choose what I want to do. Wednesday, Thursday, Friday is when I decide, do I want to keep it, or do I want to push it into next week, or do I want to cash out, get all my money back, and pick something else? Because think about it. If a stock is going up, well, I want to own it as it's going up. As soon as it hits the top and starts going down, that's when I want to get rid of it. Because if it's not going up, creating more cash flow, it's time to let it go. Because here's the thing. If the stock jumps up 10, 15, 20%, you're going to have people just like me, just like Jim. I see Jim over here. Going to take our profits and we're going to run. We're going to take our marbles and go play in another sandbox. It might be Coca-Cola. It might be IBM. It might be U.S. Steel. It might be Ford, General Motors, IBM, AT&T, Procter & Gamble. Something that I've heard of that I know has consistently been profitable for decades. Those are the only games I want. Those are the only sandboxes I want to play in. I mean, come on, we're all children at heart anyway. But think about it. If I'm going to make a nice profit off of Pepsi, she goes up for a while and then profit taking starts, well, I want to abandon ship and go another sandbox. All right, so let's do one here. Now I have mine preset for 10 contracts, so I'm going to change this to just one so the numbers don't scare people. And then you can understand, well, if I have one and I have this much money, well, maybe I can get 3 contracts. Maybe I can get 4 contracts. All right, now I'm going to change it from a limit order to a market order. Now, the difference between a limit order and a market order is quite simple. A limit order, you're saying, this is what I want to pay. That's it. This is what I want to pay. Okay, but a limit order may never get filled. I don't do limit orders when I enter into a position because I do a market order because it fills instantaneously. And the reason why I do a market order when I enter, because the stock order and the option order are tied together. So I know exactly what I'm making, even at a market order, filling instantaneously first thing in the morning, because they're tied together. So it fills first thing. Now, if you do a limit order, it can sit all day long, not fill at all. Depends on what your limit order's at. So I always do market order when I enter, and I only do limit orders when I'm selling. Because when I'm selling, this is what I want. I want my 1%. If it's higher than 1%, great. Give me more than 1%. But 1% is my limit on the bottom. All right. So, one contract, market order, confirm and send. Here's the numbers. Are you ready? I always tell everybody when you are doing your trading, read it out loud. The number one mistake everyone makes. I've been trading for 20 years and I still make the mistake. Hitting the wrong button. Everyone does it. Okay, so buy one, covered call, Pepsi, 100. That means it's the weekly. 11 July 25. That's not this Friday. That's next Friday. Because we already said this Friday is only 3 days left. There's no way we're going to get 1% in 3 days. The 132 call option against the Pepsi stock at the market to open to open. Now it says to open. No, I didn't stutter. It's 2 orders. Okay? Stock order, option order. To open to open. Think of it this way. Stocks you buy in New York, options you buy in Chicago. All right? So this order here, 2 orders. Okay, this is what it is. That's the order. Read it out loud, make sure it makes sense. Second thing you want to see here, the maximum profit. Now, remember I told you I know exactly what I'm going to make before I even do the trade? Well, a covered call tells you that. I don't have to wait for the stock to go up. I don't have to wait for the stock. The stock doesn't have to do anything at all. Okay, my profit is right there. Whether the stock moves or not, I'm making that profit right there, $207.50. What is it costing me? What is my investment? Anytime you're buying a cash-producing asset, such as a vending machine, such as a rental car or a rental property, you have an investment. You put up money up front, and then you get a return. Well, with real estate, you put in a big chunk of money up front, and you get monthly income. Well, great. Well, I'm putting a big chunk of money up front, and I'm getting weekly income. Okay, I did the math many, many years ago. Okay, I could pay a couple $100,000, buy a house, and get all this cash flow. Or I can buy cash-producing assets in the forms of stocks and get a weekly cash flow, 1% a week. That's over 50% a year. I don't know anybody in real estate, not including the appreciation, okay? Because yes, the housing goes up in value, okay? Housing also goes down in value. Okay, but the investment, $12,993. So let's get out the calculator to find out what kind of rate of return that is. Calculator, here we go. All right, so profit, $207.50. $207.50, and I'm going to divide that by the investment, which is $12,993. Gives me a grand total of 1.59%. Okay, 1.6. That's for a week and a half, roughly a week and a half. Okay, so it's not this Friday, it's next Friday. Okay, fine. 1% a week. That's over 50% per year, if it makes sense. Well, think about it. We all know who Pepsi is. Do you honestly think Pepsi's going to disappear in the next week or two? Well, I don't think so. Can you imagine? Is it possible? So I got a question. This is the question where I qualify whether or not I want to have a conversation with someone. Say, who do you think killed John F. Kennedy? And if anybody says that idiot that the government wants us to believe, then I don't want to talk to you. If you believe the Warren report with a magic bullet, you know the magic bullet theory? Bullet goes, stops in midair, turns, goes, stops again, turns, dips on the ankle, then goes. If you believe that crap, yeah, I don't want to have a conversation with you. Think about it. They're telling us that a bullet can stop in midair, turn 90 degrees, and then proceed forward. Yeah, so if you think Coca-Cola, Pepsi, Ford, General Motors can disappear overnight, yeah, no thank you. Anyway, so 1.59% for Pepsi. If you like Pepsi. If you like Pepsi at this current price, what is it? 132. Well, look at the chart. 132 for Pepsi, it's almost at a year low. You're going to make most of your money buying low and selling high. Well, 132 is pretty damn low for Pepsi. Let's go back to the chart. I gotta get all this out of the way right there. Let's go all the way back here. Okay, now these are not my numbers. I didn't make these numbers up. This is what it is. The high of the year for Pepsi, 181. The low of the year for Pepsi, 125, 128, something like that, right down here. You're going to make most of your money buying low and selling high. Okay, so if you like Pepsi, great. Not going to get much lower than the low of the year. All right, so let's keep on keeping on. How you calculate, Hayes, how do you calculate 1%? Oh boy. Now, Hayes, you're going to be a little embarrassed about this, okay? You're going to be just a smidge embarrassed about this. How do you calculate 1%? All right, Hayes, you ready? Here we go. The stock price is $132. 132. Okay? Some people call it 132. 132. 132. So what's 1% of 132? 132. $1.32. Okay? 132. 1% is $1.32. You take the decimal point, move it over 2 places. 1.32. That's how you calculate 1%. Okay? 1% of 100 is 1. 1% of 200 is 2. You're just moving the decimal point over 2 places. That's it. It's a little silly if you think about it. All right, Club Med Tom had some Mara purchased at 16.16 on the 10th of June. Got today 0.3 for the 1650s. Okay, what's the question? That's not a question, that's more of a statement. Where do you look to see if it's been a stock for 20 years? Okay, Broncorp, you ready? Broncorp, you ready for this? Google. Seriously, Google. Dividend Kings list. Those are companies that have increased their dividends for 5 decades. Dividend Aristocrats. Those are companies that have increased for 25 years. Ooh, look at that. Oh, it's gone. Damn it. Okay, Broncorp, yep. Wally World is over 25 years old. That is on the list. Dum bum 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 bum. Yeah, do I? No, I don't get it. No. Okay, Fonzarelli. I'm still waiting for you to get me back that information about MSTY. How consistently, how many years has MSTY increased its dividend payments to its shareholders? Zim, Anton, Zim, same question for you. Where do you look to see? I already did that one. Autopilot. All right. Dun, 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 dun. Ben said, hello. 130 is the bottom. All righty. Club Med Tom. Maybe he can chime in, but I wouldn't have bought the 16 call. Okay. NEC Easy. I don't buy options. You're talking about buying the $16 call? Yeah, I don't buy options at all. Okay, 80% of all options expire worthless. All righty. Gen X, 78, woohoo! Good evening, Verizon, please. VZ. Oh, that's interesting. Let's take a gander, shall we? Hey, it's Miss Sherry. Hi, Miss Sherry. All right. Verizon, the high, the low, where was it? Where is it? Look at that. Ooh, look what's going on right there. That looks attractive. Really does. But before we get into that, let's go take a look at the chart. 43.27. The 43s are going for 54. Yeah. Think about it. Okay. Who asked me about 1%? Okay. $43. 1% of $43 is 43 cents. Isn't that weird? Okay. What's 1% of 43? 43. Anyway, so I like the numbers. The 1-year chart looks okay. So let's break it down and look at the 90-day chart, the 30-day chart, and see where is it going next. Because Rod Stewart, 1970s, every picture tells a story. Okay, that's telling me a neat story. The high, the low, where was it, where is it? Look at the motion. Up, down, sideways. What's going on there? Let's zoom in. Are you ready? A year ago today, right there, 41.58. We bottomed out in the beginning of January at 37.52, and then we topped out in the March 7th, which is the first week of March, at 47.31. All right, let's look at the last 30 days, because to me, that's the most important. Reason why I say that, okay, is because I'm doing trades weekly, jumping in on Monday, getting out on a Friday. So I want to know what you guys are thinking. Well, this is you guys, me and you guys. We are the investors. We say it's too high. We say it's too low. That's what we do. The market maker just opens the door, say, come on in, buy some stuff. All right, so here we go. 30 days ago, we're at 43. We jumped up to 44, dropped down to 41. Now we're at 43. Well, what do you think? Up, down, up. It's not that difficult. Adults have a tendency to make this more complicated than it needs to be. Up, down, up. Okay, bottom's here. Now we're up here. Does it make sense to jump in? Well, the 43.27, I look at the 43.50 and no. 43.27. If I buy it at 43.27 or 43.26, and I try to sell the 43s and pick up 28, but I'm losing 26 cents. I'm walking away with 2 cents. Yeah, no. Sorry, the numbers just don't work for Verizon. You'll find that often, even 2 weeks out. That's not this week, that's next week. Okay, this, I like this. But the covered call, no, just doesn't work. Now, here's something interesting. Now, I don't normally do this, but look at this. Okay, the 43.50 put is paying 2%. Think about it. If you like Verizon, you can sell a 43.50 put. And as long as she stays, well, if she's above 43.50, you don't have to do anything. But if it's below 43.50, which it is, you have to buy it at 43.50 between now and next Friday. I mean, that might be a better play. So when people ask, do you only do covered calls? No, I don't, but I only give it away for free. But I just noticed that if I'd pass it along, why not? Throw you a bone. It's called a cash secured put. Okay, the 43.50, that's over 2%. If the stock is above 43.50 come next Friday. Well, right now it's at 43.26 and it's in an upward trend. Well, where's 43.50? Right there. It's not that far away. Now, the funny thing about a cash secured put, if it doesn't fill this week, well, you push it into next week. If it doesn't fill this week, push it into next week. Give it some time to move. There's lots of ways of doing it if you like Verizon. If you like Verizon at this price, this area right here. I'm going to write this one down. 43.50. It looked interesting. All right, let's keep on going. Lonzo wants to know how to roll up. Well, Lonzo, there's a difference between rolling up or rolling out or rolling down. I try not to roll up because it always costs money to roll up. To roll out, which is the same strike price. Okay, when you roll up, you use for instance, okay, if I did the 43.50s, okay, if I was going to do the 43.50s, rolling up would be the 44s and the 45s. Rolling down would be the 43s or the 42.50s. Rolling out would be the 43.50s. The same strike price, just moving it out another day. So when you're moving out another day, okay, you get more premium. And then when you're moving it down, you get more premium, but it's cutting into the stock price. Okay, so whenever you go roll down, but roll out and down, okay, you're lowering the stock price or the strike price. So you're losing value on the stock. You got to make sure you make that back along with some profit. So you got to remember that. All righty. What do we have over here? We did Pepsi. Poised to pop. Okay, got that one. Eagle, what's the point of following the stock pattern? Did you really honestly ask me that one? Okay, hold on a second. Hold on a second. All right. Eagle, let me ask you a question. If you looked at the chart, it looked like this. Stock is going down and then sideways, a very slight upward trend. Now it's going down. Would you buy it as it's going down? Because you don't know what the next day is going to be. Because the next day, it could be lower. And then it could be lower. And then it could be lower. And then lower. And then lower. There's a reason why you follow the bouncing ball. Wherever it's going next, that's where I want to be. Okay, the trend is your friend right up to the end. So as the stock is going down, well, yeah, you can bet on it going down. But eventually, it's going to stop, turn around, go back up. And then it's going to go up to a certain point, okay? It's going to go up to a certain point, then it's going to turn around and go down. It's going to get to a certain point, it's going to turn around and go up. They get to a certain point, turn around and go down. That's all stocks do. If you're going against the direction of the stock, well, if you're trying to buy as it's dropping, that makes no sense. If you're selling as it's going up, you're losing profit. It's always important to follow the crowd. It's easier to follow the crowd than it is to walk against it. You ever try walking against a crowd? It's not easy. You ever try swimming against the tide? That ain't easy either. It's easier to go with the flow. The flow, down, up, down, up, down. Eventually, it's going to turn around and go back up again. Okay, you could do whatever you want, seriously. But to follow the pattern, to follow the flow, it's a lot easier. Now, remember, I'm only looking for 1%. So as I'm following the flow, it's easy for me to get, because once I find the bottom and it turns around, then it can go back up again and I can get my 1 or 2%. That's all I'm looking for. Okay, I'm not greedy at all. I just want 1% every single week, consistently, because that comes to over 50% per year. Oh, okay. Sounds like I made a good call with Pepsi. Okay. Move the decimal point to the left 2 places. Yep, that's about it. I think Clorox is a great buy. Oh, let's take a look at Clorox. CLX. CLX. Yes and no. Well, it's a good call because look what's happening here. This looks like the bottom for Clorox. See, but look, we're at 170 and she drops all the way down to 120. That's a $50 drop. But look at the bottom. Okay, here's the bottom right there. And you get 2 days to the upside. 1, 2. Awesome. Okay, it's poised to keep going up. If the third day is going to be up, that's where I would jump in. But I'm not going to do Clorox because Clorox is a monthly. And I don't do monthlies because the numbers just don't work. Okay? Matt and Leah. Now, Matt and Leah, you've been here before. Okay? I've seen that name before. Don't get me wrong, I love Clorox. It's been in business for over 100 years. They are a dividend king. They have increased their profits for over 5 decades consistently. But monthlies, to me, just don't pay the same. Not there, the money. KDP, KDP. Kinder Morgan, right? KDP, Kinder Morgan, KDP. Keurig, Dr. Pepper, no. Okay, another monthly. I don't do monthlies, the numbers just don't work. Rod, iRod, what's happening, iRod? How are you today? Now, iRod, let me explain to you why I don't like the Qs. Okay, other than the fact I don't want to pay $500 a share. Other than that fact. Right there. Okay, the Qs. Q. Now, the Qs have been around for a long time. Now, what I say, iRod, I'm looking for consistency of profitability. That means profit higher every year for at least 2 decades. 2 decades, that's 20 years of increased profitability. That's what I'm looking for. I'm good, thank you. How are you? Okay, iRod, hold on, take a look at this. Okay, number one, besides the fact I don't like paying $550 per share, okay, let's take a look at the profits. Now, we're going to go all the way back to 2005 because that's 20 years ago. Okay, iRod, you ready for this? 3 cents. 3, 10, 2. Now, explain to me why 3 to 10 is great, but 10 to 2? That's not good at all, in my humble opinion. Okay, going from 3 to 10, that's great. But going from 10 to 2, no. Okay, 3, 10, 2, all right, 2.9, 2.6, 2.3, that's going down. 5.4, 2.7, it's backwards again. 3.7, 2.6, backwards again, 5.3, 3.3, backwards again, 3.4, 2.8, backwards again, 4.3, 4.9, 4.4, backwards again, 4.1, 7.3, 5.1, backwards again. Do you see what's going on with QQQ? Okay, the profits go up, the profits go down. Profits go up, profits go down. Now there's over 10,136 companies. Now we look every Monday. Every Monday we look how many stocks are available this week because they add new companies every single week. So if there's 10,136 companies, why would I put my money into a company that's not consistently profitable? Profits go up, profits go down. Profits go up, profits go down. I don't like the Qs, they're not consistently profitable. I have no desire to put my money into something that's not consistently profitable. Let me show you what I'm looking at. Now, I use this example every time because it's freaking perfect. MSFT. Okay, let's go all the way back here. All right, this is what I'm looking for. 2005, 8, 9, 10, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Every single year, higher and higher and higher and higher. Okay, why would you want to invest your money into any entity that is not consistently profitable? Seriously, think about it. You like that, iRod? All righty. I'm good. Thank you, SM Rocky. If you get assigned on the shares on a put you sold, would you then sell calls? If so, which delta? Now, Rocky, you do understand when I say this was created for a 9-year-old. Now, I'm not sure about you. I love my daughter dearly, really do. I'd die for her. I'd die for any one of my kids. However, I would